Good morning, everyone. Welcome to the market forecast. I think you guys are creating a new opening for me with that. Good morning. It's time for the market forecast. I'm John Hoagland. As always, thank you for trusting me with your time. Hopefully, you've been patient this morning and things are going your direction. We've got some action early this morning in these markets. Some decent opportunities near weekly kickoff levels before the open, on the open. Some decent things here. All I ask is that you use a consistent lens to view the markets. A lot of folks come to me and say, Hoag, how do I become more consistent and profitable? And the first question I bring is, are you consistent in the lens that you're using to look at the markets? And are you consistent in your risk management? Always think risk first. We got to put in the the link for the group coaching today. Looks like we've got a pretty good group. I don't have any emailed in questions just yet. That's at 1 o'clock Central today. I look forward to seeing any and all of you there. As far as this morning, 7:15 Central Time this morning, ADM employment came out. They were looking for 177,000 increased number of jobs added over the last month, and it came out at 117. So that's a little bit of an ominous tone, especially knowing that we have the employment numbers tomorrow and the unemployment numbers on Friday. So that's got markets a little bit on their heels. We also have 9 o'clock this morning, the ISM Service Index 930, the EIA Petroleum Status Report. That should be a fun one today. 2 o'clock, the Beige Book comes out, which means we are exactly 2 weeks away from the next FOMC meeting, and there are three Feds talking today, throughout today. So there's a few things to keep an eye on. We just have to remember that we do have the big number, the unemployment number, coming out on Friday. So I'll be kind of watching to see how these markets respond to this ADP number, and then of course jobless claims tomorrow, the big number again on Friday. As far as news is concerned, well, before that ADP number came out, U.S. equities were looking pretty peppy this morning. I guess some good news on the vaccine ramp up came out. We have Texas and I think Mississippi are opening for business 100% next week. At least Texas is next week. I know that. Because they've been seeing a lot of reductions in infections and hospitalizations. That's all good news as far as the COVID virus is concerned. And it, again, had the markets a little in a good mood this morning, but they got knocked off their little pedestal this morning after that ADP number, again, an ominous number. Earnings season's winding down. We're not seeing a lot of very important earnings here today. Just to go over a few: Dollar Tree and Marvel, Domino's and Wendy's. A lot of college favorites there. You got Domino's, you got Wendy's, you got Marvel Comics, and Dollar Tree. Hey, I'll go to Dollar Tree. Looks like Lacey wants to say good morning to everyone this morning. Good morning, Lacey. She's griping a little bit here. She thinks I should be paying attention to her and not the markets. Crude has been trying to shrug off a surprise boost of 7.3 million barrels by the API announced last night. They're looking for just under a 1 million barrel draw today by the EIA. It's always anybody's guess as to how that's going to come out, and it's always anybody's guess as to how the markets are going to respond to that. Okay. Consistent lens, risk management, news, feds, stuff. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so that you can get notifications when we do go live. If this is your first trip to the market forecast, welcome. We're going to try and bring some decent information and some decent ideas for your trading day today. Again, we're not talking about buying or selling anything in particular. We look more at zones and areas of possible executions. Looking this morning at the VIX. VIX was up slightly at 24.33. That's just a few minutes ago. And the dollar index holding up above that 91 level at 91.02. The 10-year yield kind of creeping back towards that 1.5% level overnight, but still holding down below that for now. So, again, make sure you like, share, comment, question, feedback, and heckling I do like to say good morning to everybody. I saw Ralph, first one in the room. Good morning, Ralph. Good morning to your wife. I guess your wife has had some recent success lately, and it's a great thing to hear and great thing to know. Brian D. Felix, my brother Rick, good morning. Bill, Jonathan, Will, Clarence, Troy, D. McGregor, good morning. I can't say McGregor without saying it with kind of a Scotch accent. Richie, Murph, good morning. Rod, good morning. Brian, at what point do aging rock stars become professional traders? Is it while they can still stay up for the open from the night before or when they need to nap and be woken by the bell? Well, this aging rock star has been at this for quite a while, so I've had a lot of late nights and a lot of sleepless nights coming into the trading pit. When I did have bands, it was always challenging because when I first started trading, let's see, I was trading. I had a job tending bar at night, and I was also in a band that was working in clubs around Chicago. So I guess I don't know how to answer that. I do enjoy a good nap, and I don't like to be woken up by any bells. But great, good question, Brian. Thank you, James Caesar, Tim, Tanya. Good morning, Javier. Good morning. Quick question: where can I find the volume indicator that John uses on the 30-minute chart? Okay, we're going to take a look at that here shortly, Javier. I will on the first chart here. I will show you how to add that. Danny Ireland, John, JD. Good morning, Piples. Piples, I haven't seen you in a while. How have you been? It's been a while since we've seen you. Glad to see you're back, and hopefully things are going well for you. The chef Mike is here. Rob, Shane, Shady Trader, good morning. Angelina, Magnum, Trading Research, Vast West, Josh, and Shane. Good to see everyone. All right, so let's dive in. The charts are stable this morning. That's a good thing. Here we're going to start on the daily in crude oil. We saw the boost in the API numbers last night, 7.3 million barrels. The market really kind of recovering nicely off of that. We still have the OPEC meeting. They're talking about continuing to limit production, at least the Saudis are. So that's kind of kept us up above our weekly kickoff low here of 59.60. The market really just opening. We are still, again, waiting for more data from the EIA as well as OPEC. I'm going to take a look at the 30-minute chart here, but you guys know what I'm going to be saying. When there's all this information due out today and tomorrow, I'm going to try and stay very patient and wait for the market to tell me, hey, you know what, this looks like a good, cheap opportunity. I'm going to be waiting for that. I'm going to be kind of thinking that with settlement down here at 59.75, we've got some overnight longs in this market, kind of holding at the high of value, just inside the high of the range from yesterday, continuing to try and push this market higher. Inside value, I'm going to try and stay patient. At the extremes, there may be an opportunity for us here. But again, I do suggest, it's going to be an hour before, or an hour and a half before we get the EIA numbers. I'm going to try and be patient unless something comes to me before that. And then I'm going to watch and see what happens with the EIA. And then if there's something that comes to me as a reaction to that, I'm not going to go into it with anything. But if there's a reaction that I can respond to, it's something I would consider doing. So, while kind of putting together my notes this morning, we were kind of coming off of our highs, kind of reconciling some of those overnight longs. I think we're getting longer here. I can't see really if the opening range is the low of the regular trading hour session, which might be something that I would certainly be looking at. We have a few things to look at above for potential targets. We've got a naked point of control up here at 61.51. We've got value high up here at 62, just to name the first couple that I see. So again, if we reject value early in the session, it may mean we may move higher. But again, everything can change on that EIA petroleum status report due out at 9:30 Central Time. Again, okay. Oh, here. Let's see, Javier. So I'm going to take this one off. Remove. Lacey's still complaining because I'm talking to you and not to her. Sorry about the noise. So here it is. It's right here. It's in Drawing Tools. You click here. You go Volume Profile. You go to the start time in crude oil. It's 8 o'clock. 8 o'clock, I'm going to click, let go, and then drag the cursor over, and then click again where I want the profile to end. This is regular trading hour session only, okay? If you have more questions about that or how to adjust or how to change the colors or anything like that, please feel free to come to the group coaching session here at 1 o'clock. Pop that question in there and I'll get a lot deeper into it. Right now we're going to focus on the S&P's volume. Continues to remain low for the last couple of sessions on the upside and yesterday's downside move. Investors are, as we can kind of suspect, probably just positioning themselves to be hedged or however they want to be for the unemployment numbers here on Friday. Did we add some open interest yesterday? Yes, we did. We added 11,000. Does it mean much? I'm going with probably not because of the situation that we are in. We are so kind of attached to this weekly kickoff high here. It's been visited so many times. I'm kind of thinking it's going to be losing some of its luster. We looked below it this morning. It looks as though we're going to open above it. We'll take a look at that here on the 30-minute chart. Last reminder for today, that is, that our equities and currencies are going into rollover week. A week from tomorrow, well, the equities, the S&P, the Nasdaq, the Dow, and the Russell will all be working on getting their rollover done a week from Thursday into Friday. We'll talk more about that. Let's take a look at the 30-minute chart. All right, so here we are. Let's make this kind of big so we can all see it. This 38.58 level has been really, really helpful at certain times here in the past couple of weeks here. We've got support here. We've got resistance here. We've got support here. Is it going to remain supportive here as the U.S. equities begin to open up? Settlement here, 38.6750. Put that on your charts. We had some overnight longs here that started to get a little bit nervous before the ADP number came out. You can see what happens when they get nervous. You can see that they have now unraveled those positions. We are now kind of coming into this market flat in very short time frame. Our short time frame longs have gotten out. We're holding right here at an important inflection level. This is going to be a very interesting opening. I'll be watching the opening range to see if it remains at either the high or the low of the session. That opening range, again, for the S&Ps is at 830 to 831. If we break out above it, maybe that means we found some buyers above this inflection level. If we open below it and we leave the opening range at the high, maybe we found some sellers that may be in control of that market from moving forward. So the opening range may offer a decent opportunity. We're opening out of balance from yesterday, out of range, and out of value from yesterday. Might be an earlier opportunity for us. Okay? Take a look at the 30-minute chart. Oh, this is the 30-minute chart. What am I talking about? I'm going to be focusing really on the extremes. I was looking at this early this morning, and our overnight low was pretty much settlement. Our overnight high was pretty much value high from yesterday. We've got a little bit of a change in the situation here. This longer time frame, important inflection level is really more where my focus is going to be, and I'm viewing it as somewhat pivotal, but be careful. Pivotal markets tend to sometimes become magnetic, and you'll go above it and below it and above it and below it. And if you're using it like I'm going to be long above and short below, it can chop you up. So be cautious about that when you're watching where this market opens up. Most importantly, the Nasdaq is in a different but similar situation. Just seems to be the way it is right now. The Nasdaq has come off its highs considerably more than the S&Ps, but it still is creating low volume. We had an increase in open interest of 2,700. I don't think that that's all that important. We are range bound. We are preparing for whatever is going to happen on Friday, or at least that's the way it looks. We are coming into rollover. Always remember that. Again, I think the investors, longer-term investors, are really just positioning themselves to protect themselves or to profit on whatever happens tomorrow and Friday. We got a little bit of an ominous view from that that ADP number this morning. 30-minute chart. So again, we got a little bit long. Settlement was down here. We got a little bit long, but we were still inside value for most of the session yesterday, or last night, I should say. We've opened, we've reconciled all those longs. We're looking to look to the downside. We've got plenty of space down here. We've got 12,500 is our weekly kickoff low. Because the market, the Nasdaq has been presenting as weaker, we are inside our weekly kickoff levels. We're 13,447 on the upside, 12,500 on the downside. Large area of space. Robert, when should we switch the contracts we trade with rollover in the S&Ps? In the equities, it's probably going to be next Friday. We're probably going to start next Thursday with higher volume in the March contract, but by the end of the day, Thursday, it'll probably be greater in the June contract, and that's usually when I switch. Robert, we'll be talking about that throughout the week next week and kind of gauging when that crossover, when that rollover is really going to kind of go into effect. So stay tuned. Back to the Nasdaq. Yeah, we've got some. I'm calling this kind of shorter time frame shorts in this market now because this happens before the open, and I think that they're kind of bolstered. I think that they're emboldened by that number. We're going to be opening out of range and out of balance. Again, I'll be watching the opening range for an early opportunity. When we open out of range and out of value, I think there's a little bit of a higher probability of the opening range trade actually playing. Again, 830 to 831 is the opening range in the Nasdaq. Watch and see which side breaks out first. It might give you an early indication of potential buyer or seller control. Nice thing about it is typically in the S&Ps, it's a smaller opportunity. It's a smaller risk. In the Nasdaq, it can tend to be a much bigger opening range and much bigger risk. So consider that before jumping into it. Look at the gold. Gold is just continuing its downside structure here that it's been kind of in since, well, we don't even know, but what we can see here is back to October. We're seeing lower highs, we're seeing lower lows. The open interest added 1,500 off of that weekly kickoff level from the overnight night before last. We got within $2 of it in the overnight, well, just after the ADP came out this morning, I'm still kind of waiting to see if I'm going to get my opportunity for an execution at that 1704 weekly kickoff low here. Downside structure remains. If I do get that opportunity, it's nothing I'm going to be thinking is going to be the absolute low for a long period of time. I don't see that structure exists in this market just yet. So it might just be another opportunity for a chance at this weekly kickoff low, which was so wonderful for anybody that was trading overnight night before last. Take a look at the 30-minute chart. Settlement all the way up here, 1733.60, right up here. We've got all overnight shorts. All of those overnight shorts are holding against a longer time frame inflection level that should be supportive. I'm going to be looking for an opportunity if I get my chance to get an execution down here near this 1704 level. We got within $2 of it. Didn't get to my entry, but we may still have that chance. I'll be watching for this. And it's an opportunity that I can get an execution, and I can limit the risk on it because of the importance of this weekly kickoff level. That's our night before last move down towards it. Pretty darn close. We get another chance at it today. I might take it. Where are we? Okay, I think that's pretty good. I think we've opened with a gap. We have not closed the gap. We should be trading in the direction of the gap. But again, with all of these overnight shorts and this important inflection level, there may be an opportunity for us there. If we can't hold that inflection level, we can't hold that weekly kickoff low, it's not going to be necessarily a positive for our gold longs. The euro kind of falling off the radar here still. I mean, we're centrally located between weekly kickoff high and low. We're range bound for the last 2 months. We're kind of falling off as far as volume is concerned. We lost 3,300 in open interest. It's almost like nobody cares anymore about what's going on with the euro. It's a little different story. I mean, we've seen some action in the British pound. The euro is just kind of hanging around here, so I'm not really looking for any good opportunities here. It is short time frame control, which might be interesting for us because that typically allows us an opportunity to limit risk better. We got our 2090, 1.2090 level, which was an important weekly kickoff level that we can see is still somewhat impactful. We had a decent move to the upside yesterday. We had oh man. Okay. All right, I'm going to go back and look at something in the Nasdaq for us. But, yesterday we had a pretty decent move to the upside. Still range bound. Where did this start? Well, we opened at the low of the previous day's range. We looked lower. We didn't find any continuation down there. We came up, we tested right to basically this important inflection level up here. We've traded down to the value area low here. This is an example of how short time frame traders tend to respect short time frame levels. Overnight highs and lows, regular trading hour session highs and lows, value areas and points of control, as well as sometimes even settlement. So not really that hot on doing anything here in the euro. The 10-year is interesting. Okay, we've got our push to the downside here. We've got smaller ranges in the opposite direction. This is presenting itself as a bit of a bear flag. If we can see the rate get back above a 1.5%, I think we could see a potential pretty serious breakout to the downside here off of this technical pattern. Unfortunately, that's probably going to take apart our equities markets as well. Take a look at the 30 here. Rollovers are over pretty much. So yesterday on this move to the upside, we lost 29,000 in open interest. Nothing too impactful for the 10-year. That's pretty thick market, but we're starting to. Here's our trend line here, the bottom of that bear flag. We've broken out below it. We've been below it since the opening. Looks like we're continuing to kind of push lower in one time framing activity, like lower highs, lower lows. I don't want to fight this because, again, I think it could be a substantial move, particularly if we do see our 10-year rate get back above 1.5%. Now, as of just about now, it was 1.47. It's up a little bit, just 0.6%, 0.6/100ths%, but still, since about 3 in the morning, it's been creeping back to the upside. So that's going to, of course, be something that we're going to be thinking about as the day goes on, especially if we're going to continue to trade equities. I wanted to show you one thing here in the Nasdaq. I don't remember if we discussed this yesterday morning or not, but it's a good example of something we call the value area special situation play. Yesterday morning, we opened up here. We opened out of range and out of value. We drove back inside value. We closed the first 30-minute bar inside the previous day's area of value. That's one sign of possible reacceptance of value from the previous day. The next 30-minute bar could not get above the value area here. When that happens and we open outside of range and outside of value and we reaccept, again, subjective term, this play can be tricky, but it says that, if we reaccept inside the value area from the previous day, that at some point during that session, we may see price rotate all the way to the other side of the value area, which this market did in the last 30 minutes of the day yesterday. So Are we at risk of doing that? Well, we are. If we open below and we reaccept inside value from yesterday, that puts us at an opportunity for a continuation to the other extreme of value. The question is going to be, is it worth it? Look at the value area from yesterday, from the day before yesterday, and how it played out yesterday. Pretty decent range. Yesterday's value area range, not as much. Thought I'd just try and throw that out there and show that to you. All right. So I did it. We've got about 3 minutes before the equity open. I'm looking forward to seeing everybody at the group coaching session. I'm going to pop that in the room again one more time here. Looking forward to having a good group. Looks like we've got a pretty decent group in there already. Always room for more. Bring your questions. I look forward to seeing you there. Dan will be back with us for the market recap today at 3 o'clock. Always looking forward to see Dan the man. Take your deep breath. Stay humble, grateful, and creative in your trading today. Get out there and profit. Be patient. Use the consistent lens. Avoid the secondary opportunities today. And trade well. Have a great trading day. We'll see you later.